Hello, everyone, and welcome to the session in which I will discuss FICA taxes. FICA is Federal Insurance and Contribution Act. When we say FICA, what we're really covering are two taxes, the Social Security tax and the Medicare tax. And that's something you need to be familiar with. Now, I'm doing this recording and I'm using the example 2024 as the tax year. If you're viewing this recording in 2025, 2026, 2027, or anytime in the future, the limit might change. The limit, and you're going to see what the limit is for Social Security, but the rate usually does not change. So you need to know what FICA taxes are, how do they work, and it doesn't matter in future years, those rate changes or the limit change, the limit will definitely change from year to year because adjusted for inflation, you will be fine. Just get the concept. Remember that FICA, 50% is for responsibility of the employee, 50% the responsibility of the employer. Then in the next session, we would look at the self-employed individual, and we'll see that the self-employed individual is both the employee and the employer. So we're going to start with FICA. If you are an employee, explain this concept. We'll have another session for the self-employment tax. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. As I mentioned earlier, FICA taxes represent two taxes, Social Security tax and Medicare tax. It's a two-part tax. The Social Security tax, the technical word for it is Old Age Survivors and Disability Insurance, and basically OASDI. And the reason for this tax, I want you to understand, is when someone retired, old age, they retired or they become disabled, well, they paid into a social system and it will pay them some money so they can survive. And the Social Security started in the early 1930s after the Great Depression. The government wanted to create a program. Medicare, basically the same thing. Hospital insurance or medical insurance, it's called hospital insurance, the technical word, for the elderly and other specified individual. It came a little bit after, maybe in the 50s. They added the Medicare tax to the Social Security. But they're basically both under this act called Federal Insurance Contribution Act. Now, we need to understand that this tax, FICA, half of it is paid by the employer, 50% is paid by the employee, 50% paid by the employer. In other words, if you work for a company, you pay 50% of that tax, your employer pays 50% of that tax. What does that mean if you don't work for a company, you work for yourself? We'll see this in the next session when we deal with self-employed tax. You pay both. But if you are an employee, you'll pay both. How much do you pay as an employee? The rate is 6.2. You pay 6.2. Your employer, your company pays 6.2. What's the total tax? 12.4%. This is for Social Security. We have to understand there is a wage limit for Social Security, and this wage limit will change every year. It means I'm giving you the example for 2024. If you're watching this recording in 25, 26, 27, the limit will change. I could assure you it's changing every year for the past 30 years, as far as I remember. So don't worry about the limit, whether you are studying for your enrolled agent or CPA exam. On the CPA exam, they don't ask you for the limit, and if they do, they provide it, but you have to understand there's a limit. And what does it mean there's a limit? It means as an individual earns money for that particular year, for example, for the year 2024, for the sake of illustration, once this individual in the year 2024, from January till, I don't know, at some point during the year, this individual reaches 186,600 in earnings, that's it. They stop paying Social Security. Their employer will stop paying Social Security. Let me put this here. This is the employee portion, and this is the employer portion. So that's the Social Security. There's a wage limit on that. Medicare, what's the rate? 1.45%. You pay 1.45, your employer pay 1.5, together 2.9%. So the Medicare rate is 2.9%. Here we go about Medicare, there's no limit. In other words, if this individual end up in 2024 making $10 million, they will take the $10 million times 1.45, and that's how much they are responsible in Medicare taxes. Now, the reason is you might be asking why there's no limit for Medicare and there's a limit for Social Security. Here's the logic behind it. When you retire, remember, Social Security is for your like your retirement income. When you retire, they're not going to pay you an unlimited amount of money. They're going to pay you a limited amount of money. Therefore, what you contributed is also limited. But for Medicare, when you retire, you may need literally millions and millions of care, medical care. The government is willing to do that. But you have to pay unlimited amount, or you may need none. Hopefully you need none. That's fine, stay healthy, right? But that's why there's no limit for Medicare. That's what you need to understand. Now, if we combine both of these together, the total for FICA is 15.3. Now, bear in mind, if we take 15.3 and we'll divide it by 2, it should be 7.65. 7.65. So the employer pays 7.65, the employee pay 7.65, a total of 15.3. Now, let me show you, as an employee, what do you see on your paycheck? This way you kind of be able to touch this. So assuming John Doe as the employee, employee ID, department, pay period, pay date, great. John for this period earned $2,850 wages, overtime, and bonus. Now what's going to happen is this. When it comes to focus with me on Social Security and Medicare, ignore the others. This is not what we're doing now. So his employer will take $2,850 multiplied by 6.2%, and they will take from his paycheck a deduction of $176.70. His employer will take $2,850 times 1.45%, and they will take from his pay $41.33. Those are the deduction that's John responsible for. Now, bear in mind, the employer will have to do the same thing. We have to multiply this by 2, and the employer will have to come up with $176.70, $41.33 as well. Now we have one additional tax that some people might be subject to, and that's called the Additional Medicare Tax, known for some people as the Obamacare or Obama tax. Came about when the Obamacare, the Obama medical care, went into effect. And the reason for this tax, the reason it's called the Obama tax, it's because to finance the Obama care. Now, this tax, this Additional Medicare tax, notice it's called Additional Medicare tax, requires employer, the company that you work for, to take from your paycheck an additional 0.9%, little bit less than 1%, once your wages exceeds a certain amount. Now that amount is $200,000 depending on your filing status, but usually $200,000. Now, once surpasses $200,000 in earnings, and here we consider that you're making, in quote, a lot of money, or at least the government thinks so, high earners, you will pay this additional tax. Now there is an amount for each class of tax filing status, but $200,000 is the general amount. The tax, now bear in mind, is solely the responsibility of the employee. Simply put, the employee only pays this tax. What does that mean? It means the employer don't have to contribute, don't have to match. What do I mean by this? Remember when we talked about FICA, FICA Medicare, FICA Social Security, and Medicare, the employee and the employer pays that tax. This is the responsibility of the employee themselves. There is no corresponding amount that must be matched by your employer, by the company that you work for. As I mentioned, there are different amounts for different filing status. If you are married filing jointly, you will start paying this tax when your wages exceed $250,000. Now bear in mind, if you're married filing separately, it's even less than $200,000, which is $125,000. Remember, married filing separately, they always get penalized. Government don't like this. They will try to discourage you in any way, shape, and form that they can, and this is an example of it. Now, all other taxpayers, it's $200,000. Who are the all other taxpayers? Single. That's another taxpayer that's not married.
married filing jointly. What else? Qualified widow or widower. That's another one. And head of a household. Make sure you are familiar with the filing status. Now let's take a look at an example to illustrate this concept, to clarify the computation that we learned about in this session. Let's assume Adam, a single taxpayer, earned $272,000 for the year 2024. Now the question is, what is FICA related taxes and additional Medicare withholding, if any? How about his employer? So we need to compute not only how much Adam will have to come up with, but also how much his employer will have to come up with, and we need to determine whether there are any additional Medicare withholding, additional tax withholding for Medicare. Well, starting with Social Security tax. Remember, the base limit for Social Security, assuming 2024, is $168,600. And as I always mention, once I mention a specific year and a number, that limit could change. Therefore, the maximum amount Social Security withheld from Adam is 0.62 or 0.062, which is 6.2%, times the maximum limit, 168,600, and the remainder, obviously, any amount above that up to 272. The difference between 272 and 168,600 is basically Social Security tax free. But if we take 168,600 times 6.2, Adam himself is responsible for $10,453.20, and remember, his employer will have to come up with the same amount because that's his weight, that's his share. His employer will have to come up with the same amount, $10,453.20. How about Medicare? Medicare is easy. It's very easy to compute the regular Medicare. Why? Because it's all your wages times what? What's the rate? 1.45%. So 272,000 times 1.45% or 0.0145. Remember, I don't have to mention this again. Times 2 because the employer will have to come up with 3,944. Remember, the employer will have to match dollar for dollar. It means this is what Adam pays, 10,453.20. Employer come up with that amount. Adam pays $3,944. Well, his employer will have to come up with $3,944. Is Adam subject to any additional tax or the additional Medicare tax? And the answer is yes. Since Adam is single and Adam's earnings exceeds $200,000, well, guess what? That additional amount above $200,000 is subject to that 0.9% or, 0.9%, and that additional amount is 72,000 because 272 minus the base 200,000. We're going to take this amount and multiply it by 0.009, and that's going to come up with $648. This is the additional Medicare tax or the Obamacare tax. The question would be this: will his employer, will Adam employer, the company that Adam works for, will have to come up with the additional 648? And the answer is no. This tax is the sole responsibility of the employee, which is Adam in this situation. Now, as I wrap this up, I want to go back and remind you what I mentioned at the beginning. Limits, for example, this number here, 168,600, might change. This limit, 200,000, might change, although I haven't changed in years, but it might change. Who knows, maybe the rate 0.9 might change, or the 6.2. Usually those don't change, the rates, at least for the past few decades. Every once in a while they change them temporarily, then they go back to that 6.2, 1.45. Nevertheless, as a CPA candidate, as an enrolled agent, you want to be familiar with the concepts. If rates are involved, you'll either be given those or you will be expected to kind of memorize for a particular year. Regardless, the key is to understand how does the Social Security tax work, how does Medicare works, how does the additional Medicare tax works, given any year, whether it's 26, 27, 28, so on and so forth. What should you do now as a CPA candidate, accounting student, enrolled agent? You want to go to Farhat Lectures and try to work additional MCQs, true, false, additional lectures. That's going to help you do what? Prepare for your classes, prepare for your CPA exam, prepare for your enrolled agent exam. Invest in yourself. Good luck, study hard, and of course, stay safe.